Trading is closed on the 7th of January, 2022. We always begin with our disclaimer, so let us do that. It's my trading plan for Monday the 10th. Please remember it's my plan. I can be wrong. Any trades you make should be at your own risk. Start out by going over our calls. Look for the pattern with the early low. We had that. Tends to be a rally day. High in the final hour. We had that. When it's weak like this, it tends to lead to more weakness. But what counts isn't today's close. What counts is Monday's open. And if Monday's open gaps up smartly over this consolidation, for instance, all the negativity of this pattern goes away. And as we'll see, I think that's one of the possibilities. Now, we did have an optional target of 46.75.51, and that did print, and you'll see there's support at the target price. Now, support doesn't have to hold, but it has held so far, and typically when you drop like this into support, either you gap under support or the support wins. So if you're a bear, you really want to gap under this line. And if we don't, I think the most likely thing is we're going to gap over this high. Just because I think it doesn't make me right. During the day, we had a sell signal from MEJT that worked. When we dropped down here, MEJT said it was false, wouldn't stick and we retraced. We did that. Also said this move wouldn't stick, that it would retrace, and it certainly did. So all those things have played out. We're looking for more of a drop from this line than we've had, but that doesn't mean we have to drop every day, and doesn't mean we have to drop Monday. We have room up to the 47.20s without breaking through the line, and that's over 40 handles from here. And if we do get a rally Monday, it doesn't really break any of the rules. Now here's the market dropping like this. If you look at standard indicators, this one is MEJT. You'll see how that's not confirming this decline. This looks like a descending triangle, but I'll show you why it's not. And this is non-confirming. This is RSI. That's non-confirming. So we have divergence at the low. Now you have to have some way to count this. This low is worth a Fibonacci target of the prior consolidation. You take the range of the consolidation, set that at 38.2, your hundreds right at this low. I think you can count a clear 5 waves down, and this could be black A or blue C. And what makes it interesting, trying to sometimes the software boy, it won't let me show you what I want to show you. We'll get there. Okay, suppose this is wave blue A, and this is black A of blue A. This is the height of black A of blue A. Look at the purple lines, that's the height. So this is the height of black A of blue A. and it's exactly equal to black A or blue C, if that's what this is. And if we're looking for blue C to be equal to blue A, that's the kind of picture you want to see. What makes it interesting is the rally off of this low. I think it's a clear 5-wave structure. If this were a triangle, you wouldn't want a 5-wave structure in there, you want it to be a 3. And not only is it a 5-wave structure, we had a straight line drop right to the 61.8% retrace and right at the support level. So if that's the right count for 5 waves down, we've got 5 waves up, 3 waves down, could certainly argue for one more leg up, even if it isn't a very strong one, because that's not a particularly strong rally. It's only like 35 handles, but that would take us pretty close to that line that we showed. So we won't know if that'll happen until Monday's open, but certainly the inability to follow through after a day and a half of dropping. We undercut this low, went under it, couldn't hold on to it. The divergence of those secondary indicators certainly argues for one more move up, probably equal to this one in size, before any decline resumes. Now, of course, it doesn't have to work. It's a plausible pattern, and if it's going to work, we'll probably be gapping up when Monday's open. And if it doesn't happen, if we don't gap up Monday's open and move up right from the open Monday, it's probably the wrong interpretation. But that's, I think, the most likely one at this time. And of course, if it doesn't happen, it's kill before the open. And certainly if we gap down because we have lower targets, it's really kill before the open. But I think it's a very plausible occurrence. It certainly isn't a lock. Boy, the software just is not working for me today. All right. Monday's pattern has the early high. We could still gap down. Dropping like this on a Friday is unlikely to find support from retail customers. Those are the amateurs. Nevertheless, despite undercutting yesterday's low, we're able to close over the lows of the last 2 days. We have MEJT and RSI divergence at the low, which is a fib target of the prior consolidation. There's a wave count calling for higher prices Monday, though probably not much higher, before the decline resumes. If this interpretation is correct, we should rally right from the open. And that conflicts with the tendency of the market to have a Monday follow-through of Friday's late trade. So if we don't get right from the open and move up sharply from the open, the call's probably wrong. Call isn't a lock, it's counter trend. I personally am looking for positions to enter shorts rather than looking for scalps on the long side. But I do think there's a real chance we have that move up and Monday's open. And if it does happen, I'm going to be looking for places to re-enter shorts. And that's today's call.